In this video, I'm going to share with you 10 ways that I reduce my taxes selling on eBay, Amazon, and reselling in my business. What's going on, everybody? My name's Steve, and I've been reselling on eBay, Amazon, a bunch of different marketplaces for over 9 years now, and I've learned a lot of different ways to be able to reduce my tax liability. Now, I'm gonna say right now in the beginning of this video, this is not tax professional law advice, right? Any of that stuff. I'm just a guy on the internet who runs a reselling business, and I'm just gonna be sharing for educational purposes and entertainment purposes what I do in my business to reduce my tax liability. Now, of course, I always recommend to everybody, I always have friends asking me, how do I reduce my taxes? Should I, hire a CPA or an accountant or go to H&R Block? And I always recommend, once your business starts to become a bit more complicated, especially inventory-based businesses, if you're, making more than $10,000, $20,000 a year and you've got a lot of moving parts, it's always good to get yourself a CPA. That's a step up from an accountant. But either way, get yourself an accountant or a CPA, because I actually have a good friend of mine who overpaid his taxes by $5,000 last year because the people at H&R Block, I don't know what happened, but they didn't even write off any mileage, which is huge. It's a really big deduction. So let's get into this video. If you have any questions afterwards, again, you could ask a question down below. Again, this is not tax or legal advice. I'm just sharing what I personally do to be able to ethically reduce my tax liability, because you really only want to pay what you have to pay, what you're legally owed as taxes. And I can promise you right now that nobody's going to come and save you. The state or the federal government's not going to say, hey, Steve, hey, John, hey, Heather, you overpaid, right? If you overpay, if you don't, utilize things to your advantage when it comes to the tax laws, then you're going to overpay and you're never going to know. So I'm going to cover 10 deductions, 10 ways that you can reduce your taxes. Again, my experience, not telling you what to do. Please seek a financial advisor, a tax professional, because it's different for everybody's situation, so on and so forth. So the first thing that you want to make sure that you're tracking as an eBay, Amazon seller, or just a small business owner is your mileage. This is a huge deduction. So I believe at the time of this recording, it's about 50 cents per mile that you save. So think about it. If you write off 12,000 miles, that could be saving you $6,000 on your taxes right there alone. So there's a bunch of different apps and tracking softwares that you can use. A popular one that I've used before is called Mile IQ. I'll link to that down below, but you want to make sure that you're writing off mileage, that you're tracking your mileage, because it's a really, really big deduction that can save you a lot of money on your taxes, bottom line. Number two, let's talk about a couple different things. Let's talk about cost of goods sold. So this is making sure that you're tracking the amount of money you're spending on your inventory that you've sold. Any fees related to PayPal, payment processors, eBay fees, Amazon fees, all that stuff you want to make sure that you're capturing. I recommend everybody gets a software, whether that's Godaddy bookkeeping or QuickBooks. Link that up to your eBay and Amazon account, and you could set up some automations to be able to track that so it just gets pulled right into your books. Also, any tools, any supplies, office supplies, any of that type of stuff that you're spending money on for your business is a write-off. So you want to keep track of all of this. Again, QuickBooks is great. That's what I use. And with that software, you can link it up to your bank accounts, your credit cards, to your e-commerce platforms, and you could set up, again, automations that will pull and categorize the different expenses in your business. And this is really important. When you sit down with an accountant or a CPA, they're going to want to know what's your mileage, how much inventory do you have on hand, what did you spend on inventory, what is sold, how much have you spent, office supplies. If you have any really big purchases, such as equipment or tools or supplies that are thousands of dollars, from my understanding, there's like a depreciation cycle. So you really want to keep everything organized. And I've talked about this in other videos. I'll actually link up a video right here. I have some of my best bookkeeping practices. You want to make sure that you split off your credit cards, your banks, everything from your business. Do not commingle your personal and your business. Again, check out that video. That will really help you out. Number three, Meals and entertainment. Now, you want to talk to a tax professional to be able to distinguish the difference between, what you're actually allowed to write off as a meal or expense if you're traveling, if you're not traveling, if you're in your local town. I'm not going to talk too much about that, but a lot of people think, all because I'm at home and I'm, working on my business and I ordered a meal that I can write that off. But based on my understanding, talking to other accountants, there's like usual and unusual, acts of being able to write certain things off because you're at your home, so it wouldn't really be considered a business write-off. Again, talk to a professional about this, but you want to make sure that you aren't taking advantage of the system, writing things off that aren't really write-offs. And of course, you can get away with any and everything. You could write everything off until you get flagged and the algorithm catches up to you, and now you have an IRS agent at your door. So, if you ever were to get audited, which means they look into all your financials, all your write-offs, all of that, you're gonna have to prove that it's a business write-off. Again, I'm just a guy on the internet, but from my understanding, you do not want to get audited. And, there's a saying that says, pigs get slaughtered. So it's kind of a nasty, saying, but it's true. Like, you don't want to take advantage of the system. You want to follow the rules. You want to be ethical. You want to be moral, and you don't want to get slaughtered. You don't want to take advantage of it and set off any triggers or algorithms. That's why you want to have a good accountant, a good CPA that can kind of let you know, are you in range? Is this right or wrong? And how to kind of interpret all of these different, laws or write-offs, because a lot of these things are up for interpretation and you want to talk to a professional. So meals and entertainment are really big. In the past, I believe they were like a 50% write-off, but I believe post-pandemic, at least right now, it was 100% write-off. So obviously that might change, talk to a professional, but you want to be able to track your meals, entertainment that are business related. Another big one, number 4, is education. If you spend money on courses, self-development, anything that's helping you to be able to grow your business in the form of continuing education, courses, anything you're spending money on to learn, books, that could be a write-off as well. So keep track of that. Number 5, rent or home deduction. If you're renting a warehouse, if you're renting space, even if you own a home, again, I'm gonna continue to give the disclaimer, talk to a tax professional, but there's something known as it's like a home office deduction. I believe, based on what I knew, it was like 10% or something like that. You can't just write your whole house off, but talk to a professional about that. If you're doing business at your home, talk to them about that home deduction, because that could save you a little bit of money as well. Again, it's not going to save you a ton, but something that you definitely want to consider. Number 6, this is a great way to be able to reduce your tax liability, and that's through investing in an IRA. So there's different IRAs out there. There's SEP IRAs, there's Roth IRAs, there's traditional IRAs. Essentially what an IRA is, it's like a tax vehicle where you can invest in it's hard for me to explain, but think of it this way. Say you want to invest in a Roth IRA. Essentially, you can put a certain amount of money into it. I think right now it's like $6,000. And that's money that, say you want to invest in like stock market or whatnot, you could put it in a Roth IRA. And essentially what happens is you pay taxes on that now, but then you're able to grow that account essentially tax-free, and you can pull out. You have to pull out at like a certain time, 64 or 65, but essentially you pay taxes now, and you're able to grow that and not get taxed down the road. Now, that's not gonna save you any money today, but there's other IRAs like a traditional IRA or a SEP IRA, and there's different rules in terms of how much you can put in based on how much money you made and what type of business structure you have. So again, talk to a CPA. But for example, this year I invested into a 401k, which reduced my liability. So I put like 20-something thousand dollars in. So say I was supposed to owe $30,000 in taxes. By me investing in the SEP IRA, it lowered my tax liability by like $3,000 or $4,000. Now I had to put money into it and I can't touch it till I'm 60-something years old, but that reduced my tax liability. So what happens is I reduce my taxes now because I'm putting it into that retirement account, which was the 401k, and then down the road, I will have to pay taxes on that. There's also something known as a backdoor Roth. If you make a certain amount of money, you can actually, I'm not even gonna get into the details because I don't fully understand it. This is why I work with professionals. But if you make over the certain amount of the limit, you could still invest in it. You just essentially have to go around it, and there's some loopholes and whatnot. But a traditional IRA, I think, again, it's up to $6,000. Correct me if I'm wrong. you put money in that today, it reduces your tax liability and you pay taxes later. So talk to your CPA. I'm not gonna sit here and pretend I know how to explain it exactly, but talk to your CPA, your accountant, about investing in an IRA, whether a Roth or a traditional based on your goals is best for you. But that could actually reduce the amount of taxes that you owe. Again, you're gonna have to spend that money and you're gonna have to put it into that tax shelter and let that grow, but you can either pay taxes now or later. You can save now or save later, so that's really up to you, but look into that. I wish I would have started doing that sooner, but that's definitely something that could really help. Number 7 is subcontractors or virtual assistants. So if you have people that are working for you, whether that's an employee or maybe it's a virtual assistant, you definitely want to track what you're paying them because again, that's a write-off right there. Number 8, travel. So, you know, flights, business-related flights, business-related Airbnbs or hotels. Again, I mentioned meals and entertainment. This is all a write-off if it is a business expense. So make sure that you're tracking that. Number 9 is going to be health insurance, business insurance. So make sure that you're keeping track of this, you know, for 2021, which we just went through. You know, my CPA, he sent me a message and said, hey, how much did you pay in your health insurance over 2021? So I guess there's some type of deduction there. I also have business insurance, general liability and whatnot. So you want to be open and share that with your tax professional because there will be some write-offs. I'm not exactly sure how impactful they are compared to like mileage and cost of goods and meals and entertainment and education, but definitely some things that could help you to reduce your tax liability. And last but not least, any charitable donations. I mean, maybe you ended up donating a bunch of stuff to Savers or Goodwill. You want to make sure to keep those receipts, keep track of that because that again will help you to reduce your tax liability. So hopefully you enjoyed this video. Again, to recap the 10 ways to reduce taxes legally, ethically. Again, talk to a tax professional is 1. Your mileage write-off. 2, it's gonna be cost of goods, fees, tools, supplies, office supplies. Number 3, meals and entertainment. Number 4, education. Number 5 is gonna be rent or a home-based deduction. Number 6, investing in a traditional IRA, a SEP IRA. Number 7, subcontractors, virtual assistants. Number 8, travel. Number 9, health insurance, business insurance. And number 10 is any type of charitable donation. So hopefully this video helped you out. I'll link some resources down below that can help you. Again, this is not tax or legal advice. I know there's going to be someone who watches this and wants to pretend to play accountant or play CPA. Don't. Get yourself professional because what I'm saying in this video, some of these things might only apply to me, maybe because of where I live or based on my, you know, my tax structure, my business entity. So again, talk to a professional, but hopefully this was able to open up your eyes a little bit so you can be prepared and get some of these things ready and some of these ideas ready for your tax professional to be able to reduce your tax liability. So with that being said, hopefully you enjoyed this video. If you did, like, comment, subscribe, share this video. And if you have any questions, drop a comment down below and I'll do the best I can to answer it for you. So with that being said, much love. See you in the next one. Bye.